Hi guys, and welcome to another episode of the weekly alts analysis series, whereby we take a look at the most popular altcoins in the market and show you how to easily identify key levels of higher time frame supports and resistances, so you can then use them to either dollar cost average in or potentially play some longer swing trades. So what we're going to do this week is we're going to have a little review of Avax, DOT and Sol, both in their USDT and BTC pairs. So go back and take a look how our levels have fared up since we marked them out about 2 months ago now, or 2 months in Sol, and then probably about 7 or 8 weeks for Avax and DOT. So yeah, we'll take a look back at those and see how the levels fared and the potential profits you could have made had you have used them yourselves. But first of all, we'll take a look at BTC as we normally do. So held that 19k weekly level as we've spoken about, and we're having a bit of a rally at the moment. All eyes, or all expectations I should say, are that we're going to have a strong bear rally into this sort of 29-30k area, which is obviously a monthly level. Previous support now probably flipped to resistance. We'll have to see when and if we get up there, but as we've mentioned before, it was the bottom of the summer 2021 capitulation, and also that strong level that held up in May and then finally broke on the Elon Musk news. It broke when Elon or Tesla sold their BTC. Obviously we didn't find that out until quite recently, but if we break it down to the daily time frame, the big problem we've got at the moment, or the big resistance, is this 24.2k level. It was the local top back on the 20th of July, and if we take a look back, it marks the top of this little consolidation range we had just before Christmas 2020. And you can see the reaction once it broke, and also the reason why we fell so fast from 30k down to 19k. It was just there's no levels of support or resistance here whatsoever, so could be a fast move up if we break 24.2. Obviously there's a double top scenario potentially here, and also it's very dependent on what happens in the traditional markets. But yeah, that's enough for BTC. Let's get on and take a look at the pairs we're looking at this week. So as I say, we're going to review them one by one, USDT and then the BTC pairing. So if we go to Avax, we made this video back on the 20th of May. Unfortunately, it didn't come down to this monthly range that we had marked out, about $11.64 down to around $9. If we take a look at the weekly though, so as I say, around about the 20th of May, so back here is when we made the video, we had a nice little bounce on this range between $21.50 and $23.80. You might have been able to make some small profits there, bottom of that range to where we spiked up about 35%, not too bad. Then obviously the level broke and we came down into this lower weekly support range around, call it $16 down to about $14. Again, nice little wick right to the bottom of the range, and that rally, if you're still hanging on, you would have probably taken profits at the bottom of this higher range at about $21, where you see the rejection we had on the week of the 27th of June, come back down, could have got refilled again, and then currently we're at the top of this weekly resistance now, but you're looking at about 70% profits from there. Obviously, as I say, you probably would have taken profits. Maybe you did or didn't get refilled back here, whether you deployed the capital again or not, but ultimately from the bottom of this weekly range at $14 up to where we are now about 24, you're looking at about 70% profit. So not to be sniffed at all. Nice little bear market profits there. If we then look at the BTC pair, so as you can see, we are right into this resistance at the moment, between this resistance range between 9,500 sats and about 10,500 sats. Had a lovely little bounce in June in this monthly support range between about 6,500 sats and 5,500 sats. The wick just dipped in there, and you're looking at about, from where we are now, 66% profits. Right at the top of this month's wick, you're looking at 86% profits, which again, for a bear market rally, not too bad at all. If we take a look and break it down to the weekly, So again, you probably would have taken profits on the bounce from the monthly range at this weekly range of resistance here, about 8,000 to 8,300 sats. And then again, it continued up into the monthly resistance. You got a nice little dip back into the weekly support, and then we're back into this monthly range that I mentioned between about 10,500 and 9,500 sats. So even if you caught this dip into the weekly support range up to where we are now, you're looking at around 25% profits, which again, 25% gain on BTC units, not too bad at all. Now if we're going to push further here, let's go back to the USD. In fact, no, we don't need to add anything to the USD chart. We've got our monthly resistance range above us, which is about $32 to $35 should this rally continue, and obviously BTC go up to 30 odd K. But on the BTC side of things, I think the next level of resistance for me on the Avax BTC, so you're probably looking at where these candle bodies have stopped here in September and October 2021, and also these wicks from December 21 and January 22, and this wick here May 22. So let's go ahead, get rid of the magnet and get our box tool, and as I say, I'm going to start at the bottom of that wick from December 21 and go to the top of the candle bodies of September and October 21. So that range is between about 16,000 sats and 15,000 sats, give or take. Give it a monthly tag, and then if we go down to the weekly, and yeah, that's perfect for me. As we can see, catches these wicks here, December 21, January 22, these candle body closures and wicks here in April and May 22, and also September and September 2021 as well. So that would be my next area of profits should we see a break of this monthly resistance that we're currently in at around 10,500 sats. So that's Avax done. Let's move on to DOT. So DOT, we recorded that video on the 27th of May. So back here, we've had a nice little, just tapped the very top of this monthly support range at, what's that, $6, about $6.20. So the lowest price it went was bang on $6 on this. This is the DOT tether on the Binance chart. So yeah, $6 bottom there. If we go to the weekly, again, we've not hit a level of resistance that we've marked out just yet. Let's tidy these boxes up. The next level for me is this $9.20 to $10, call it $10.50 weekly range of resistance. So again, if we see a continued rally from BTC and the rest of the market, definitely a good profit taking area for me. You can see where this wick from the 19th of July 2021 bounced right off about $10.50. So yeah, anywhere between $9.20 and $10.50 for me, great profit taking area for DOT if you've bought some down here. And yeah, that's really it for the USDT side of things. If we take a look at the BTC, again, pretty similar scenario. So we recorded the video. Let's break this down. When did we actually record? 27th. So yeah, probably going to right when we were just coming into this monthly support range. So you definitely would have been able to get filled there, and it's literally a monthly to monthly play there, right from the bottom of the range at what, 2,500 sats, right up, just tagged the bottom of this resistance range at just under 4,000 sats. So a nice 45% move there. If you caught that, breaking it down to the weekly, not really much to add. As I say, just a clean move from bottom of the support range to the bottom of the resistance range. For a nice 45% move. Again, price is hovering just above this monthly range that we've got marked out. If you adjusted it slightly just to catch the top of these candle wicks here from the December 2020 and January 2021, then maybe you could have caught that. And it's all down to personal interpretation. So these levels are by no means 100% accurate or the only way to do it. This is just the easiest method that we've found in learning crypto, and it's really effective. But yeah, it's all down to personal interpretation. Let's move on then to Sol, final pair, USDT monthly. So again, we record this video 1st of June. When did that wick come in? So yeah, we recorded the video just before we came and wicked the monthly support level. So just right at the top of it. So we've got it marked out here at about $26.38. And the lowest price on this chart was $25.86. So you would have just got filled there. Obviously, if you're dollar cost averaging in, maybe only your first order got filled, but at least you got something. And you're looking at, we've just gone right into the next resistance area of between $42 and $47. The last week we hit right at the top of that range at $47, so it's been a lovely bit of profit there. If we take a look, let's get the magnet tool back on. So yeah, from bottom to top, you're looking at 83.5%, which again, for a bear market rally is fantastic. You can see it's a clear level of resistance in the past, so it would have definitely been a key area to take profits, and still, because we're there. Should we break above it, then it looks like a really clean run all the way up to $75, which would be pretty good. It would be a 58% move from here, and if you're still holding on from any of your original entry down from $25, you're looking at nearly a 200% move, which would be absolutely fantastic. So yeah, congrats if you've bought some down here and you're still holding on. Obviously would advise taking some profit off the table here, clear level resistance, but if we do break above it, then you're looking at some fantastic profits. Onto the BTC pair in then, and once again you got this nice almost perfect monthly to monthly level play here. So again, we recorded the video 1st of June. Let's just double check when we dipped into it. So yeah, perfect. About a week or two before this dip into the monthly range. So if we go from bottom of that wick to where we topped out, you're looking at just short of 100%. And as I say, we just missed out on this monthly resistance zone where we've got it marked out at 21,000 sats, just short of 22,000 sats, from where you could have bought down at 10,838, that monthly level that we highlighted. So again, not too bad at all. If we look at the weekly, and again, I remember marking this level out just below the monthly level. We've got a weekly level resistance here. I marked out because of this wick here on the 23rd of August 2021, and these two wicks here on the 7th of March and 14th of March 2022. And you can see that wick goes right into it and then rejects. So great little profit taking area there. And if we take a look at those two weekly candles, very clean. You're looking at, again, about 85%. Not too bad at all. So yeah, that's it, guys. So as you can see, really effective way of marking out your charts and showing you how you can make some really decent profits even in a bear market, just by identifying these key levels of higher time frame support and resistances. Really cuts out the emotion. You can dollar cost average in, so maybe you have like 4 or 5 orders from the top of a range down to a bottom of a range, and then your invalidation is simply if price closes below, and then you can jump out. And unless there's a big nuke, then you shouldn't have too much of a loss. Or as always, use proper risk management. Don't risk more than you can afford to lose, etc. But yeah, if you've seen the videos, guys, it literally takes 5 to 10 minutes to mark up both a USDT and a BTC chart on an asset, and it can be really effective. So if you've got any questions, guys, leave them below the video. If you've got any requests for T8, again, leave them in the comments below. Next week we will go through VeChain and Matic and review those, and then after that we'll then go through and review set 2. We just need to give them a couple more weeks to play out, as we've only just marked them up in the past few weeks. So hope you enjoyed it, guys, and we will see you on the next episode.